will we live in a world where you can buy a fraction of a house and it's tokenized and it's basically like a tradable asset that you can day trade essentially? Not that like people are really going to do that, but could I buy, half of Pav's house and like it becomes more liquid and things like that?
Everyone's trying to get on the housing market. It's becoming more and more unachievable for a lot of people and generations now.
And there was a bull market outside of the crypto ecosystem itself. The stock market, we saw DATs go crazy, the digital asset treasuries, they were doing hundreds of % gains as well. So it was almost like there was a bull market outside of crypto, but it was still crypto flavored.
Hello guys, welcome to a very special Christmas edition of the Tapping Into Crypto podcast. As you can see, we're decked out. Yeah, in colourful Christmas kits. This is coming to you on Christmas Day. Believe it or not, they got us in to work on Christmas, so I think it's a bit ridiculous. But look, we're here because we're dedicated.
Yep.
To the left of me, we have the lovely Pav.
Lovely, that's kind of you.
Yeah, it's Christmas.
Yeah, true.
What do you love about him?
Yeah.
Mate, let's not get into that. And then to the right of me, a familiar face. I haven't seen him in a while, but for the long-term listeners, you'll recognise this face and this voice as Mr. Tommy Honan.
Gents, great to be back in the pod with you guys.
Yeah,
for a special episode.
Once upon a time, Tommy was a regular on this podcast.
What happened,
mate? You ditched us.
The crowd spoke.
Yeah.
The listeners spoke.
Yeah, they got their pitchforks out.
That's fair enough.
No more Irish accent. But look, welcome back. Tommy, thank you so much for coming on this special Christmas edition. I guess this is going to be a bit of a recap on 2025 in the crypto market. What's happened? What did we learn? What were the key milestones and events? And then we'll also look forward to next year and sort of what we see happening.
It's easy to forget what can happen in the space of 12 months. So we hope this is going to be a very insightful trip down memory lane for good and bad.
Absolutely.
Yeah.
So starting off, let's look back at some of the key milestones that happened this year. We're going to, as you said, Pav, touch on the good and bad that happened because it has been a very topsy-turvy year.
Let's look at the good. It's always a nice place to start, right? So we had Bitcoin hit a new all-time high in October, 120K. So Ethereum, XRP, Sol, and BNB also hit all-time highs this year. And even Ethereum, I think it was quite an interesting sort of dynamic moving out of 2024 into 2025. Everyone said the chips were against ETH. Sol was a new kid on the block, move over, ETH bulls, but I think this year kind of surprised a lot of people in the sense that Ethereum did overtake Solana for a bit. Yeah.
It started really slow. I can remember kind of the meme trend that was going around Ethereum. It was lagging behind almost everything in the market.
Yeah.
And it took a good 2/3 even, 3/3 would be 100%. 2/3 of the kind of current cycle that we're in for ETH to actually get going. But when it did, it caught up and hit a new all-time high, first time since 2021.
Yep, so strong year for ETH. Bitcoin hit an all-time high. We'll touch on what happened since then. But what else? Bitcoin ETFs went from Wall Street experiment to global money vacuum. What do you got for us there?
The spot ETFs, it was the fastest growing ETF in history, right? Yep. So the amount of AUM that they were piling in was far greater than anything else that ETFs have seen in history in the US there. Pension funds moving in, retirement funds moving in. There just seemed to be like a whole, how good is this moment for crypto, I feel.
Yeah, the digital gold, I think, narrative really stuck.
Yeah.
And it seemed like Wall Street, TradFi kind of really latched onto that. And that's kind of, I think, why and how we've seen a lot of the capital inflows come. Bit of a boring product for me, but it still is, like you said, it is a vacuum for capital. And I think that's how it's played out. Over the last probably 2 years, realistically.
Yeah, because it launched in early 2024.
24, yeah.
This year, what did launch is altcoin ETFs. So I think we had ETH ETFs last year, but we saw the introduction of Solana, XRP, and even Litecoin ETFs on the market this year, which was huge. Unfortunately, it happened very late in the year, so it didn't really have that tailwind to drive those coins to sort of that next peak. But it's obviously massive moving forward as well. And so we'll keep an eye on those inflows, and also like what launches next. Like when are we going to get our first meme coin ETF?
Yeah, I know that's what we were talking about towards the back end of this year. If we saw the market get frothy, would we see a bit more risk taking on the ETF market? Which I don't know. I guess maybe we'll save that for later in the later questions. But just our forecast for next year, maybe what we're thinking.
Yep.
Yeah.
And Tommy, let's jump into the bad in terms of price.
Ooh,
what happened?
The old season that never came.
Oh. Yeah, this is one
Still
reminder.
waiting.
Everyone.
Any minute now. Any minute now. Yeah, I think the meme coins went crazy for a while. The expectation was that some of your previous strong mid caps, if you want to call them that, like you're not too far down the list, would have a resurgence kind of play out.
Yeah.
There was some kind of strong narratives across like assets like SUI and Hyperliquid and some of these. I think there's some assets there that have performed pretty well, but in general, yes, not too great in terms of the altcoins having their run. I think pushing towards where we're at now, like Christmas Day recording, I think the expectation was that before Christmas we were going to see some kind of a blow off top or some kind of a heavy volatile period to the upside, and we just haven't been able to see that yet. So, a lot of people I think disappointed by that realization.
And a lot of people I know working in crypto were kind of just expecting it to come at some stage this year and expecting us to have that parabolic bull market that we've seen in the past, which never came, as you said, which is a big shame. But I guess it just reiterates the point that we always say is like nothing's guaranteed in this market, and never get too comfortable and never hang everything on something absolutely happening.
Yeah, and I think if you draw back to even that 10th of the 10th big event that we saw in crypto, the largest liquidation in crypto's history, $19 billion. I mean, that's only what's recorded and reported. The real figure is probably much, much larger. It's a good idea that the whole market was positioned for that blow off or like exuberance in the back end of the year that just never came. And yeah, I think the difference with this year also has been everyone's had so much easier access to leverage.
Yes.
Especially again, we talk to products like Hyperliquid and the like. It's much, much compelling for the average person to go 10x on some sort of application like Aster or Hyperliquid than it was to just buy spot, because everyone seems to be wanting more and more and more, right? It's just got greedier and greedier. So
and people are generally way heavier and long than they are short. People are optimistic, which is good. It's a good thing in general, but with respect to market changes in a volatile market like we're in, it can spike, and that's what we've seen on that big liquidation today.
Yeah, absolutely. Okay, moving on. So what else did we see from a crypto regulation and industry event standpoint? I think like the main one for me and the narrative of this year has been stablecoins and just adoption of stablecoins, both from a TradFi perspective, but just globally. They seem to have really found their product market fit in crypto as, a use case which everyone can get around and like seamlessly adopt. But yeah, the US brought in stablecoin regulation.
So the UK eCash, I think they called it. But yeah, it's kind of like led the way for, what was it, like one of the most successful crypto product launches on the stock market, the Circle IPO. So like that was like gangbusters.
USDC.
Yeah. So again, we're talking about, in crypto, like, there was a bull market outside of the crypto ecosystem itself. The stock market, we saw DATs go crazy, the digital asset treasuries. They were doing hundreds of % gains as well. So it was almost like there was a bull market outside of crypto, but it was still crypto flavored.
It is, and it's interesting because you often see people that are not, there's a lot of skeptics still for crypto, right? And the digital asset industry in general. But people are a lot more comfortable at times to get exposure to crypto adjacent type businesses and investments, which I think Circle was a really good example of that, where people might not want to have a wallet with Bitcoin in it, but they're happy to kind of, through their, stockbroker's account, have Circle as part of the IPO or invest in those types of assets, where you're essentially getting exposure to the whole industry when you're trading with those types of instruments. MicroStrategy kind of, or Strategy now, started it all, you could argue. And then even Tesla having Bitcoin in the balance sheet, like those types of investments with crypto adjacent exposure I think it's been a positive for the industry overall. It's got more eyes on us. They call it like the gateway drug, right? If you're getting crypto exposure that way, then potentially you're on track to eventually get spot exposure and start to invest in the market directly.
Now in the bad column, we have celebrity meme coins. Now, this could be up for interpretation because some people might swear by them and say, I've nailed it on Trump. Or
who would say that?
I'm yet to find them, but I'm sure some people would. I'm sure our good friend Donald T would. So yeah, what happened? So obviously Trump coin's probably the main narrative of that whole category. Yeah, we go way back. But then we also saw Melania coin. She's obviously jumping on the trend. The Argentinian president Javier Milei released that Libra coin, which turned out to be a scam. Kanye released Ye coin. I think it just got to those levels of, we didn't have that parabolic run up as we said, but we saw events like this happening, which we've seen in the past, what typically happens at the top of a market where people just start trying to cash in on the crypto trend.
Yeah.
We saw that a bit earlier this time, and I guess DJT did pretty well off his coin, but some of those other coins, like we were looking at the Yay coin before.
They're down pretty bad,
Down pretty bad.
So I think Yay, like it got as high as 9 mil and now it's 250k market cap. The Trump coin got as high as 15 billion in market cap. It's now at about 1 billion. And then Libra got to 4.75 billion. Now it's 1.7 mil. So you could argue that that's even just like just locked up in liquidity pools. Like it's probably not even that many holders left. Just illiquid markets. So just nuts when you think about the transfer of wealth there.
Can we just hope that in 2026 that becomes the end of it? No more celebrity coins. If celebrities want to do something, maybe they can have a little NFT collection, but even then, stay away from it.
As long as there's something that can trend, there's opportunity to trade, there'll be more of these that come out. I think we've talked about it for 5 or 6 years that, is that going to be the end of X narrative? And it's like, it's something else pops up.
Because I think it's just like the next iteration of like just meme coin as a subject matter, right? The way I think of it is like you're tokenizing culture. Like we've never really had the ability to bet outside of like betting platforms where you're betting on sport. Like that's, I guess, culture to some degree, but not really. But to this effect, like where popularity moves dollar values in markets.
We also did see Bybit hacked for approximately 1.5 billion.
Yeah, that was a big one.
I can't remember when that was, about 6 months ago.
Yeah, it's about that.
Yeah, approx. Yeah.
And I think it was confirmed to be by North Korean hackers Lazarus Group as well.
Bloody North Korean
which
hackers.
was a pretty shaky one. I think globally Bybit have pretty good exposure and good cut through in market, so that would have been very, very impactful.
I think the way they handled it was pretty good. Like they got on the front foot. They weren't shying away. They basically said they'd refund customers with their own funds. I'm sure they're still hurting from it, and they will be for some time.
Reputationally, it's just a really hard one to take, right?
It's big time. But like the event having happened, I think they did as best as they could have to actually mitigate all the the damage to the reputation that was coming their way.
Yep.
Cool. So Tommy, you've got some notes in here that I know you want to touch on about RWAs.
Yeah. I think so. This is I think it's still a growing narrative, right? So not just in 2025, but I think this is one that expands far and beyond, for the next 10 years. But it's just covering RWAs, which is like real world assets and the tokenization of real world assets. And that could be anything from tokenization of equities to tokenization of a pair of shoes or a Rolex, which is already happening. But I think bringing those to the mainstream, bringing those on chain and giving normal people a reason to actually get access to products that are on chain is really important. We have seen a lot of developments in that area in 2025. I think, like I said, it is going to be something that I think just see happening more and more. I'll call out here that I think 2025 was the year crypto stopped pretending TradFi was the enemy. So branching over into closer to the TradFi elements. I seen a comment or a quote on Twitter or X the other day that said something around the lines of crypto assets are not the primary asset that people actually want running on the blockchain. That's what we have today. Like we have crypto, like the crypto assets are running on blockchain, but arguably it's the assets that the rest of the world wants and has always wanted that are more valuable on chain.
Just more accessible, more liquid.
Exactly right. Yeah. And, we talk about 24/7 markets and all these things that on-chain world opens up, tokenizing of those types of assets.
What do you think is the most successful application of tokenization in 2025? And then where do you see it sort of heading in the next year or so?
I think the products like the X stocks that we've seen launched, I know Kraken and a few others have launched them. You can now trade tokenized equities like Tesla, for example, on DeFi platforms. Like that was something I didn't have on the bingo card to enter 2025, right? So I think that type of opportunity area, it's only one of the areas, but I think everyone can relate to it. Like a lot of people, especially in Australia, a lot of people invest in equities across the ASX, US markets as well. We're pretty obsessed with trading in US equities. So I think the idea of being able to do that 24/7, potentially non-custodially, earning yield and dividends potentially directly into your Ledger wallet, for example, that's cool for me. I think the RWAs didn't bring TradFi into crypto, they brought crypto into TradFi. So that's kind of the quote that I have there. And I think things like some of the RWA stable coins as well that actually pay out yield. So the idea of I can hold a real world treasury in my Ledger wallet that pays a dividend, doing that with stable coins, whether it's an Australian stable coin, a US stable coin, or whatever currency of choice, that's a pretty powerful tool, I think. You think about your term deposit accounts, I think we can do better than that. And potentially without the bank risk or the centralization risk, and with a lot more control. So,
what about BlackRock as well? Because I know
Correct.
They're looking at launching their own tokenized stock market based out of Texas. Do we know if that's expected in 2026 or what sort of timeline we're looking at there?
Yeah, I think it's a reg conversation at the moment, but from what I've seen, it's moving at a pretty rapid pace. Because the demand is there. Right?
Yeah.
So demand generally, show me where the incentive is, I'll show you where the effort and where the efficiency comes, right? And I think that's where we've, I would expect to see it in 2026, if not, 2026, definitely 2027, in a regulated fashion as well, given the US and Trump promotion, I guess, of the industry, right?
Yeah. And they've already kind of tested the waters when it comes to tokenization on blockchain through their BIDL fund, which has been super successful in terms of the RWA space and actually getting investment and adoption there. So I know that's sort of in partnership with Ondo as well, which is a crypto project we've talked about before. But they've obviously dipped their toe in and now they're like, okay, we need to dive in.
What do you guys think about like RWA? I know you guys have a fairly decent level of understanding of like what excites you guys about RWAs if not now and like coming in the future.
I just think it creates a reason for capital not to flee the space. I think the biggest issue we've had in previous market cycles was there was nowhere for cash to deploy to just sit idle.
Yeah.
You either were exposed risk on or you're in a stablecoin, but the stablecoin had no yield component. So if you're an institution or a fund and you've got a mandate to generate returns, well, you can't do that in crypto all seasons, right? Whereas like products like this all of a sudden make it all seasons.
Evergreen, I love the idea of evergreen products, and this is definitely one of them. I think, to your point, you couldn't generate a decent yield on a stablecoin previously, potentially without taking on some pretty heavy risk.
Yeah, and everyone's got to have different flavors of seasonal risk, right? So there's a time where the call is to go into treasuries because it's just don't know. Like right now is a great example, right? Like no one knows what's coming the next 6 months or so. So I think for that it's a really good use case, and it is good seeing even outside the US, like even the UK, like they've been putting in 3 monthly, 2 yearly bonds on I think it's the Base network. I can't remember the DeFi protocol, but like it is good to see outside the US adoption of these products too, which I think is good. Makes it less of an echo chamber of just the US. Yeah.
Exactly. I'm more looking forward to more of a general standpoint of when we start to tokenize like larger assets. Like we've talked about before, what in the world, like will we live in a world where you can buy a fraction of a house and it's tokenized and it's basically like a tradable asset that you can day trade essentially? Not that like people are really going to do that, but could I buy, half of Pav's house and like it becomes more liquid and things like that. Yeah. So we haven't really seen that
in Australia specifically, right? Like people are always, everyone's trying to get on the housing market. It's becoming more and more unachievable for a lot of people and generations now. I think that's a narrative that really works with respect to RWAs.
And then you can earn passive income through the rent and things like that.
Capital appreciation is something that a lot of people miss out on because
and I think that's an easier thing to explain to the everyday Aussie. It's just like, well, imagine if you could invest in a house but not have to fork out $1 million or and get a mortgage that big. So
we had talked about this ages ago on the podcast, and I think I asked the question I still don't know the answer to. I was like, who lives in the house? I guess
tenants.
Fair.
There you go. Look, I don't know, but that makes sense in my mind. Okay, moving on to the next segment. So what did we learn in 2025? I think there is a lot of learnings, but let's start with Tommy.
I've got a bit of a spiel.
Oh, God.
I've got a bit of a spiel, as we call it.
Starting with Pav. No.
It's almost a bit of a gripe that I have. Like 2.5 years ago, when this market started to build, right? Everyone was talking about Christmas 2025, i.e. where we are right now. That was going to be like the top of the market. We're going to have this bull cycle for, 2 years, 2 and a bit years. I don't know where in that forecast everyone decided that no, it's going to go for another 2 years. And the reason I say this is there seems to be a lot of people and over the last kind of couple of months that are like looking around scrambled. We've seen the fear and greed hitting single digits. in the market. I think my expectation was everyone kind of knew this was coming. So why is everyone so surprised? That's my, not gripe, I guess it's a comment, right? I think we've talked about it for years, you know, try not to round trip your holdings, your bag, take profits on the way, you know, dollar cost average in at the right times, take profits, you know, when you're getting up towards the top of the market. Yet I'm still hearing the same things that we hear every single cycle about people not taking profits, and I'm going to wait for the next day and the next day, and next thing you know, it's like, okay, well, I'm too far down now, I don't want to, I'm actually in the red again, right? So it's more of I'm just wondering, like, why are people so surprised? It's kind of a general call out when I don't know when the narrative shifted from, Christmas is going to be to top and everyone's going to, you know, sell at the same time. Obviously, it doesn't happen like that, but I still don't feel like people, quite landed with people, regardless. This narrative been pretty solid, I thought anyway, for, you know, 18 months to 2 years before. No, do you guys have any thoughts on that?
I think for me there is like everyone was kind of banking on this huge parabolic bull market that we've seen in the past, and everyone's going to make huge profits off altcoins, and you know, people are basically overexposed to altcoins. And if looking back in hindsight, the market never does what people think, right? That's why only a small portion of people win in markets like these. So I think for me, my learning is like, you know, nothing's guaranteed, as I said before, and like never basically bank on you making $1 million in a market. If it sounds too easy and too good to be true, then it likely is. So I think just reiterating the point about taking profits, you know, dollar cost averaging in, dollar cost averaging out. I think for me, like, I did take profits at certain times along the way, but in hindsight, I should have taken more, right? Based on where we're sitting.
Another one for me is institutions. I've put in a quote here from my old man. It's Christmas. I got to do something family related.
Shout out, Papa Homer.
My old man says, do as I say and not as I do. And I thought it was a perfect quote for institutions, because in one side they've been saying crypto is bad, it's a scam, X, Y, and Z. On the other side, they're building out bloody products to sell to retail. So I think that was a key learning as well. Like, when you hear institutions pushing a particular narrative, don't set your watch to it, right? Make your own kind of assumptions. And we talked about this, I think, a lot on the podcast as well throughout the last few years, really. It was like the institutions are going to be positioning themselves and they're not going to be shouting it from the rooftops until there's actually something that can benefit them, right? So I think that was a pretty big one. Retail didn't notice it happening, right? It just happens, and it's like, and now potentially you lose some of the upside as well when you're trying to, you know, catch up with a lot of that stuff. So that was kind of a big one, I think, as well for me to call out for 2025.
Do as I say, not as I do.
What are we doing? Learnings from 2025. Yeah, I think it kind of is like in a similar breath. Like, I think at the end of the day, like, you're trying to obviously have an edge over the rest of the market. So if everyone's thinking the same thing, like we've talked about before, you got to kind of think a little bit differently. But I think this is a great example of, as much as, you know, the greatest, you know, analysts and major central banks are saying Bitcoin's going to 400K. It's not you can't, you know, don't want to bank on that, right? Like,
I must have missed the central bank saying.
Well, it's not central banks, the big banks, like with Standard Chartered saying 200K.
I'm pulling you like, Kathy Wood.
Kathy Wood saying
ARK Invest.
ARK Invest, So like, I just think sometimes headlines are just headlines, and it just again reiterates the whole idea of like, you're getting into this space for a reason. Make sure you realize that reason. Like, there's always going to be more. It's never going to be enough. So I think it's just dealing with that whole mentality.
Looking through the incentive as well, Pav. Like, when a bank is coming out saying that, look at where they're incentivized to say that. Like, that's, you know, the reality is, kind of to my last point, institutions, like, you need to kind of go a few layers deep, I think, to understand why they're pushing a particular narrative. And Standard Chartered doing heaps of stuff in crypto. So like, you know, it kind of fits.
They've always got skin in the game.
Absolutely.
Yeah, and I think for anyone that this may be like your first or maybe your second cycle, like, just understand what it looked like, what it smelt like. You know, I think the easiest takeaway is just how greedy things got, just holistically. Like, it's something sometimes you just have to feel a few times to know what it feels like the next time. So I would just say, like, as much as this was different, there were a lot of signs that this was pretty similar to what we had seen in the past. So I think just taking that away from 2025 is I think a pretty good take. How about you, Ted?
Sounds like we learnt a lot. Look, I gave a few little points in there, just some of the general stuff that we always cover. But looking forward to 2026, I think it's actually like a big juicy segment that I'm sure a lot of our listeners are looking forward to, because you know, we look forward and we don't look back.
Absolutely.
So I guess, like, for me, I'm going to throw one in there because you know, We've discussed it at length. Is it like has Bitcoin broken the 4-year cycle, or have we just seen the peak in November, and then we're off to another pullback year before it's slowly rebuilding and then having another bull market in line with the Bitcoin halving
again? The halving, right?
Yeah, 2028 next halving. So still a while away, but I disagree with that sentiment. I do think we're going to break it next year, and this is based on the fact that in previous years where 2026 would be a pullback year in comparison to the previous years in the Bitcoin halving cycle. But I think those previous years in I think 2018 and 2022 we had like interest rates were skyrocketing post COVID and sort of post that parabolic era. But it's a bit different in this case because interest rates are slowly coming down. The market's getting a little bit more frothy as we see, the stock market's sort of hitting new all-time highs, based on basically the data centers and the AI. But I think everything's sort of lining up a little bit more positively than in previous comparison years. So I just think in 2026, Bitcoin will hit a new all-time high and break that 4-year cycle. That's my sort of call out.
Boom. Heard it here first.
Yeah.
Christmas Day special. Yeah, like if I had to make a call for 2026 looking forward, I kind of do sit probably more in the realms of Ted, only because I do think Bitcoin is more a mirror of what we see happening with what's around us in the economy, in the macro. So we know that it is very sensitive to liquidity changes, and the back end of 2025 has been nothing but a liquidity rip, like it's just been a draw. And the problem with that is like you either subscribe to two narratives. Number one, you believe that the governments will step in and look to basically shore up the rest of the economy to stop it from falling into anarchy, or do we get finally anarchy? Like everything just goes to zero. So I think that the market will get some sort of relief in 2026. My biggest concern is how long is it going to last? But I still think there's opportunity in 2026. I think is my key takeaway. So again, if you feel like you've felt like you didn't do something right this year, if the opportunity does present itself, like it does pretty much every year, just make sure you've got that plan shored up for yourself and what that looks like for you. But yeah, I'm as much as I think it could take a little bit to get there, I'm optimistic for next year.
Okay.
Yeah.
That's good.
Yeah.
Tommy, are you...
I've got to play devil's advocate.
Yeah, I feel like you have to.
Yeah.
Can't
put the Grinch hat on me. No, I don't think we'll see a new Bitcoin all-time high, unfortunately, in 2026.
Wrong.
I'm expecting kind of a sideways market, which is, not the funnest. We kind of, not a sleepy market, but like a sideways market with some pretty extreme periods of volatility.
Yeah.
So I think really good for long and short trading, like our derivatives. Thanks, Daniel. Daniel threw something at me there. Doesn't like my narrative, but it's okay. I think on the positive side, I think building positions in the assets, I kind of say this is an evergreen statement for me as well, but building positions in the assets that you have your highest conviction around, those large caps. I mean, people are going to be, I believe, buying Bitcoin and ETH and Sol and all these other assets, continuing to fill the bags, at the right times, especially when we're in a perceived down market or quote unquote bear market. We know that the major profits are made for people as they accumulate in those types of markets, right? And then look at it's not buying the top, it's buying when the interest goes out of it and your Google searches are down at zero and your fear and greed is at single digits, like that's really when people make their money. But you have to wait, you have to be patient to actually realize when that happens. So that's a big one. I think realizing not all assets come back as well is kind of part of it. So you might have loved hopefully, actually I won't call out a particular coin because I'll get smashed in the comments, but there might be a particular coin that you like that just because you loved it back in 2020 and it's done well for you in 2020 doesn't mean it's going to do that for you in 2026. So I think just being open and honest about your holdings and that kind of stuff. I think businesses, I just want to cover very quickly businesses. The big businesses will continue to build products. I think there'll be a lot of accumulation in terms of bigger businesses eating up other businesses. I think that's going to be a big narrative as we see regulation happening worldwide. Australia, should be hopefully within the next year, 18 months kind of thing is we're hoping. I mentioned a big industry compression, and I think this isn't kind of a bull or bear market. It's kind of, it's a selection market. That's the comment I'm leaving. Discipline beats excitement.
Oh, excitement. Yeah, I think for me, the pub test around this time is always like, is your grandma and sort of your parents' friends asking, how to get into crypto? Or are they saying, isn't crypto dead? or I thought crypto crashed. And so that's always a good indication of, okay, maybe
we're about to have that conversation at dinner later, at Christmas lunch later on today.
Yes, exactly. So now's the perfect time to to get those responses.
Yeah, what do you reckon? Grandma's going to be asking you how to buy Bitcoin?
Probably. Actually, no, she's probably going to say, no, I don't want to touch that.
Okay.
So that means I buy. Basically do the inverse of what my grandma's doing.
That's right.
Yeah.
The reverse signal.
Okay.
Like it. Yeah.
So to finish off this episode, because we've obviously covered a lot of stuff, we wanted to give you guys some scripted responses to some of the most common questions you'll get asked at the Christmas lunch table, because every year the family gathers around and they know you work in crypto or they know you're into crypto, so they'll probably be asking you similar questions. But Tommy, I'll start with you. Didn't crypto crash?
Yes.
Nice.
Oh, do I really want to go into it? I'm just like jaded. 10 years in this market.
Yeah, exactly. Sometimes you just...
I guess it's the whole response is like, if you're interested enough to do any kind of due diligence on it, Grandma. Feels so bad. If you're interested enough to do any kind of due diligence on it, I think they're the types of people you talk to. Some people just can never be convinced. Our job is not to convince; it's to educate. So I think, yes, it crashed. I just show them the Bitcoin chart from 2009. Yeah, it's always a good little
zoom out,
mic drop moment. I think.
Yeah, zoom out. I like to call it a healthy pullback.
Yeah.
But Pav, next one. Is now a good time to put your money in crypto?
Oh, I feel like that's a different thing for everyone. I'd say, I guess I'd sort of want to understand like why do they want to get in? I think the idea of just trying to like educate again, like there in that opportunity, like it's not short-term gain. It's always a longer-term play in crypto. I think that's the biggest narrative. Like, is it a good time to get in? Well, a good time to get in was every day for the last 2 years, technically, if you were just buying. I think that's a good opportunity also just to highlight people the difference between altcoins and Bitcoin and just the store of value there. And again, I think the landscape's changing again. Like, is it a good time to get into crypto? Doesn't necessarily mean just crypto anymore. Like, again, we've got like these companies that are on the stock exchanges. You can get exposure in different ways now, like investing in Circle, people that have like a balance sheet, that have revenue expectations, forecasts, all that stuff. It's becoming a little bit more what the flavor that a lot of people expect. So yeah, I think that, the answer is always yes, but it's just like, what does that mean for everyone? I think that's for everyone to decide, but there's more options now than ever. Yeah,
that might be a hard one to emulate.
Turn that question around on Uncle Tony and say, is it a good time to buy a house, Uncle Tony?
Yeah, true. That's a good way to do it too.
There you go. But yeah, we might leave it there because obviously we've covered a lot. 2026 is going to be a huge year for not only us, but we're going to be working really hard at SwiftX. I know we've got huge projects coming our way. So crypto is not slowing down from an industry standpoint, and it might be a bit quiet for a while, but just know like sometimes the quietest times in this market represent the best opportunities.
That's right.
So I always use this time to sort of get educated, keep building on what I already know, and continue on.
Yeah. Absolutely.
I've got a parting quote.
Oh, please.
I said, the biggest mistake people will make is waiting for the next bull market. The real money gets made when everyone else is bored.
Yes.
Very true.
Is that Tommy Honan, circa 2025?
TH, circa 25.
Yeah.
Dang.
No, it's bang on because, again, no one's interested when things are not sexy, right? Yeah.
Exactly right.
Is that your quote?
Sure.
Have circa 2025.
Yeah.
Done. Love it.
Yeah.
No, I unfortunately don't have one, but I will leave. I'll leave with this. Merry Christmas, everyone.
Yes.
We'll talk
Merry
to you all
Christmas.
next year. We've got some really exciting episodes scheduled in for early Jan, so make sure to keep following the podcast, follow us on socials. But thank you again for listening, and we'll talk to you soon.
See you, gang.
See you guys. Merry Christmas.
Merry Chrysler.
Merry Chrysler.